What's going on, guys? Michael here, 360 Digital Closing Bell. We are live from an undisclosed location here in Denver, Colorado. Like I mentioned, I am your humble correspondent, Michael Tanner, joined as always by the executive producer of the show, the director and publisher of the world's greatest website, www.oilandgas360.com, Stuart Turley. He's coming to us from Dallas. Stu, how you doing?
I'm doing great. It's a beautiful day in Dallas.
Yeah, I was going to say, it is. I mean, we're recording this Thursday afternoon. Its time stands about 12:20 Mountain Standard Time. It is gorgeous, not a cloud in the sky here. I'm ready to get this done, crank out our 2 p.m. show, then just go sit outside on the porch.
I'm getting ready to hit my trainer. It's the first time in a little while I'm going to be able to hit the trainer.
Yeah, we haven't done a mileage update. We'll have to keep you updated on that. But we are excited to be here. Episode number 18. Like I mentioned, if you're listening to this is Friday, May 22nd. We're recording this, as I mentioned, Thursday afternoon. Time stands about 12:25 Pacific time. Oil's 33.85. I just like telling you when we record because with the way oil trades, it could be $40 by the time you hear this. And you need to know, like, we're dealing with the dates that we have available. We have a great show lined up, but I first need to talk to you about our friends at Adamantine Energy. And really, if you're an executive out there and you're not asking yourself what is social risk, you're really doing yourself a disservice. Your company needs a strategic partner to help manage and prepare for all of the shareholder institutional pressure that's going to come on you and your peer company, aspirational and regulatory challenges that are really driving energy policy, all the anti-gas, climate, local divestiture stuff. Adamantine Energy is the leading consultancy that's helping oil and gas companies prepare for all of this social risk. They are led by the wonderful and awesome former CEO of the Colorado Oil and Gas Association, Tisha Schuler. Adamantine Energy, they guide energy companies just like yours through your exposure to social risk, your options and results, and how your peer companies are responding, and the opportunities that social risk can actually create for your business. And that's something that you hear there's no placating there. Social risk, there are opportunities right now to get in on social risk, and that can create large revenue opportunities for your company. And please call Adamantine Energy. They're the experts when it comes to this. www.energythinks.com. I love that website. Such a great website considering what they do. I love everything about these guys. If you are not already subscribed to Tisha Schuler's weekly emails, well, that stinks because guess what? Your competitors are reading it. And it's a weekly email called Both Things Are True. Where really, she takes a look at ideas in which both sides of these things can be true. It's an awesome week. And I actually, before I met her, which was about a year ago, she was just starting to spin up this idea of both things are true. And honestly, it was a sort of mind shift for me when you started thinking about there are two opposing ideas can be true. ESG is good, but also that the fossil fuels are necessary as we continue into the future. And that's really where I think she thrives, working along that balance point. She also has a podcast called the Energy Thinks Podcast by Tisha. So you can check this all out, as I mentioned, www.energythinks.com. You can find them on all of these social medias. Great show lined up for you again. Another random story time. We actually have a larger segment rant we're going to drop next Monday. So we're going to whip around the oil field and just do a random story time. We're going to check the week that was in oil trading. Some crazy news drop. We'll check in with our 360 official, non-official fund. Tomcat is out. Spoiler alert, which is crazy to see. Really, but before we dive into random story time, please just subscribe to this podcast, iTunes, Spotify, YouTube, 360 Digital Closing Bell. The best way to stay up to date on all things energy markets. Please follow Enercom, Twitter, Oil and Gas 360. Please follow the Oil and Gas 360 news desk on Twitter, which is cranking out all of the articles that you can find on the world's greatest website, www.oilandgas360.com. Connect with the show via LinkedIn. We've got new interviews that we're dropping on the Energy 360 Network, which you can also find on the world's greatest website, www.oilandgas360.com. I just love saying that, so forgive me. We're gonna get that every time. The Energy 360 Network is also available on iTunes, Spotify, YouTube. The best way to stay updated on all of your energy thought leadership. Alex Epstein. We have coming out Tuesday interview with him. He is the author of the book, A Moral Case for Fossil Fuels, and has a really some just cool ventures he's going on right now, and has honestly is the most refreshing take when it comes to how to navigate some of this, environmental, social risk stuff that's going on. He is a very interesting guy. I really enjoyed chatting with him. Wednesday, Netherlands, Sewell. We love those guys there. Powerhouse interview. You and Aaron are sitting on that one, correct?
Yes, we are canning that one tomorrow. We're actually doing the interview with the executives tomorrow, and then rolling that bad dog out Wednesday. We're looking
Yeah, they're
forward to
the
it.
premier. If you need reserves booked, call them. That's all I need to say. It's about all we need to say. All right, enough clerical work. I think it's time now to shift into, again, random story time. I really do like to start these off with sort of a big topic, and we dive into. We're actually lining one up for you on Monday. We have a really interesting topic that we want to dive into and spend a decent chunk of time dissecting. It's kind of goes along the line with some of the things we've been talking about, but we will save that for then. When we kind of just whip around the oil field, there's at least 4 or 5 stories I wanted to dive into that sort of what happened last week that I think shed some light on what's moving forward. First, North Dakota becomes the 3rd state to hear proration meetings. We know Texas first did it late April with big commotion. Pioneer Natural Resources, Parsley Energy, big people trying to get them cut. Texas Petroleum Council on the other side did not want proration to happen, and ultimately it was decided in a 2-to-1 vote that proration shouldn't happen. And really, it's probably been a good thing as we've seen domestic production continue to drop. Oklahoma heard early this week or late last week, heard proration, and they're not expected to do anything. I think as the more and more we move throughout, it's not going to happen. But North Dakota on Monday did hear proration. It had what we call proration hearing, but really what the new terminology went from went from basically just prorating, saying no, we can't produce, to declaring oil production at certain levels waste. It's talk about a sleight of hand. It's like, do you want no analogy. It's just basically declaring it as waste. It's sort of funny. The only people that actually came out for it was Continental. You heard from Blue Hughesley, who's their Continental Senior Vice President of Government Relations. I mean, really the biggest quote that I got was, the market is working from a reduction standpoint. We are reducing, but is it being done in an efficient way? That's just when I read that quote, that's what you get out of a government relations official right there. That's what you get out of a government relations official.
He's running for political office next week.
Exactly. He says exactly why we shouldn't be cutting. He says exactly why we shouldn't be prorating. Markets are working from a reduction standpoint. But what their needs? Why are we sitting there? It just kills me when you read these quotes, because he probably thought he did really well. Then you go read back the article that S&P wrote saying, we screwed. So from that standpoint, I don't expect North Dakota to prorate at all, or quote unquote declare this waste. The other side of the coin, who was the North Dakota Petroleum Council, whose members pump 90% of the state's output. So I think, what's funny is, Continental's probably a member of the North Dakota Petroleum Council, so they're sort of going rogue. But North Dakota Petroleum Council, they were urging the commission to continue to let producers to respond to the market. We will get into what the actual production levels are for each of those basins in an upcoming segment here. But there's really been about a third of that, about 500,000 barrels of North Dakota production that's been taken off of the market, which has been in response to the oil price collapse. Current estimated production is about 950,000 barrels out of the Bakken, which is interesting. That's the first time we see Bakken production below 1 million barrels in a hot minute. But we don't expect North Dakota to actually prorate. Market seems to be working. And I think from that standpoint, it's probably good nobody prorated, because time stands right now. Oil's $33. We don't see negative pricing happening again, at least the 360 closing bell. Crude doesn't see negative pricing happening again. So that means one of two things. The shut-ins are working, and we've solved the storage issue. And it's probably a combination of both. Are you glad to hear about this, Stu? I mean, I just imagine the legal ramifications if Texas had actually done this. Woohoo!
Oh, it'd been awful. We believe in the free market, but something, it's a handoff which way.
Something's got to give. And the next thing I wanted to cover, because we were mentioning the production output from North Dakota has finally dropped below 1 million. The EIA came out and on Monday and released a wide range of what they call updates to their weekly market, or their monthly production, what they call estimates, and they call them revised numbers. And really what they did is they came up with a bunch of revisions. The last month, if you remember, EIA forecasted production to drop 183,000 barrels. So that was what their original cut was on a monthly basis, but day to day. So 183,000 barrels per day. That's a total of 8.526 million barrels per day. That number is just too huge to think about. So I always like to talk about the change from month to month. So 183, that was their original production drop that they were assuming for the month of May. They've now upped it 15,000 barrels to 197,000, which is, the EIA is always a little more conservative than I think what actually happens actually goes on in the market. So to see them continue to revise up and basically are at 200,000 barrels a day being wiped off the market just due to shut-ins, that's crazy. That's operators continuing to do their job. The biggest thing that I saw in this, and what I wanted to point out, and if you have the opportunity, I'll link this article in the show notes, but it's an S&P Global article, and they break down production month to month, January 2020 all the way through June 2020, with May and June being guesses because those numbers haven't come in yet. And they break it down by the different basins. And you can see from a month to month standpoint, we've fallen at peak. We've dropped, like they mentioned in March 2020 March 2020, which is the month before the final, the month before the current data. The current data we have now is April 2020. So if we want to go the month before that, we got to look at March 2020, which is really February. It's just because everything lags one behind one. But it was basically 9.02 million barrels a day, where in April it was 8.824. So there's about 200,000. There's the 200,000 barrels being wiped off the market. But the cool part is where it's coming off from. And this is something that the digital closing boat we've been on early, mostly because we've conveniently had experts from Inverness, specifically in Verison when we had Bernadette Johnson on there, them talking about $3-4 gas. Well, why are they saying that? They're looking at these numbers, and the key is looking at the basins. The Appalachian and the Haynesville, known for primary gas production zones, Appalachia has seen zero drop in the amount of production they have, specifically from tight oil, which basically means they're not shutting off. You produce it all together. It's not like there's a gas well over here and an oil well right next to it. You produce it all out of one. It just depends what you're actually going for in terms of what you're going to sell. When we get down to the Haynesville, there's been no drop as well. 400,000 barrels in March and April, and they predict 400,000 barrels in May and June. That's the other crazy part. When you look at the prediction numbers, not only has it not fallen off since January, they predict no falling off in both the Appalachian and the Haynesville, but huge drop off. You look at the Permian, at peak it was 4.8 million in March 2020. They predict by June 2020, 4.2. It's almost 800,000 barrels a day being taken off the market. Those confirm a lot of the stuff we've been talking about, and it was really cool to say. I love that. So if you hadn't had an opportunity, please go look at the new EIA of the drops. We will put the link in the show notes.
Yeah, and Michael, you hit it right on the nose. The other piece is the Marcellus and up in that area is more efficient on natural gas drilling than is the Permian. Permian's got a lot of problems with flaring and not having the takeaway capacity. So pretty strong on being just a flat level. As you say, they're predicting no change.
Yeah, and I think the other prediction, I think, we haven't necessarily come out and made yet, but I'm willing to start it right now and moving forward because I've been chatting with natural gas M&A market is going to be huge Q3, Q4 this year when things continue to bottom out. It's something that me and Nick Barry specifically have been talking about. And when he comes on the show Monday, we'll have to chat with him. But I think this is all leading for a very crazy M&A space for the natural gas. And so I think that's something to look for. Another story that I just want to cover real quickly for all the traders out there. So if you're not a trader, you can fast forward about 2 minutes. But if you are a commodities trader, watch out. The futures, the CFCT is now spinning up a whole new regulatory business to probe futures trading. Basically what they're doing is this is in response to a JP Morgan scandal that broke out in the silvers market. But how you basically bluff the futures market if you trade commodities, they call it spoofing, which is most people, as I always mention, there are two types of ways to trade. There's the Tomcat way, which is pure price action. Let's throw price on a chart and see what happens over time and try to correct patterns. The other way to trade is what's called volume, which is basically let's look at who's buying and who's selling, and that can give us idea of where the market was, where it's going, and possibly some trend. And both are accurate. You can trade either one. So when you hear price action, price over time. When you hear order flow, just think volume. How many contracts are coming in and out on the buy side? If you trade commodities, forewarning, you should probably be looking at order flow. It's the way that most of the professionals do it. But what can happen is because you can set order levels. So let's say, for example, oil is trading at $40 right now. You want to buy 5,000 contracts at $38. Well, you can submit an order for that, and that'll show up on every single trader's chart. And now everyone sees 5,000 contracts at $38, just slammed it in there. Well, what does that mean? Volume follows price, or excuse me, price falls. Yeah, I said it the exact opposite. Price follows volume. So if I see 5,000 contracts $2 below, I think somebody's got a good idea. This is going to go down to $38. I start short. I'm putting in shorters. Well, then what you do? Then you cause that price falls a little bit. If you're that big institution with those 5,000 contracts, you pull those 5,000 contracts, you delete the order, and now you go long right at that point to drive the market. You actually enter long and move the market. It's called spoofing the market. Up until now, it's been really, 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 really hard to catch, but actually these JP Morgan guys got toasted on it in the silvers market. So I've seen this happen before. Anyone who's traded futures and order flow has seen a spoof happen. It's tough to like call them out. You know when it happens. But just watch out for you if you're a commodities future trader right now. They're cracking down on you. I mean, in this, it's a Reuters article that let's see. I mean, look at who they're hiring. The list of who they were hiring. The unit is also hiring. Oh, here we go. The Justice Department Fraud Division is beefing up with the creation of the subunit specializing in commodities fraud, overseen by Abe Perry, a trial attorney who is prosecuted. Look who he's prosecuted. Tower Research Capital, Merrill Lynch Commodities, and the JP Morgan crew. Woo-hoo-hoo! Big boy. They're bringing in some big sticks in there. So watch yourself. Now, they're not coming after the individual day traders, but if you're working at a prop desk right now, watch yourself. Spoofing the market, no bueno. No bueno.
That's a new technical finance term. You know, it's kind of like non-GAAP, right?
Yeah, exactly. Non-GAAP cash flow, one of my favorite accounting terms of all time. Non-GAAP podcast. That's what we're producing right here. Not traditional non-GAAP podcast. So the last two stories we need to cover are actually sort of in the ESG space. Obviously, the big one that was making the news both on EFT Twitter and on LinkedIn was Google kind of pulling out of the AI and machine learning space. They basically, the reason why they are for the oil and gas industry, and the reason why they're doing that is sort of to get in line with their EOG space. It's, you know, I sort of describe it to the guy, the woman you could never date. You just finally give up and say, well, I'm not interested in dating her. Well, she was not interested in dating you. The oil and gas industry was not interested in using Google anyway for any of this stuff. So they can take the moral high ground and just back up on it. I don't really have much more to say about it. You can find the article on oilandgas360.com. They're only making about $65 million in 2019 on Google Cloud revenue. And that's, you know, they were making about $1.3 billion on cloud computing in 2019. So it's a small fraction of what they were saying. So not a very big hit to their revenue. You might not be able to find oat milk it's probably just the oat milk in the Google cafeterias that you can't find anymore. That's about all that got hit. You have to drink 2% now, not the oat milk, unfortunately.
Yeah, I'm lactose intolerant.
So there you go. And you've got one on ESG banking we need to cover real quick while we and our final whip around.
Citibank just put out one that I thought was just absolutely very interesting. It really didn't totally. They've got a whole new section for ESG financing and capital, and that goes right on into a couple different things that Tisha from Atom Energy as well as Bernadette were on their webcast. They were talking about ESG and how important it is in their field, everything else right now. Michael, what is the number one thing we're hearing?
Oh, ESG is huge. Spoiler alert, that's going to be our case study we're doing Monday. We're going to kind of dive into not the history, a little bit the history of ESG, where it's come, where it's drove, and then where we think it's heading. Obviously, Tisha Schuler and Atom Energy are a sponsor of the show, so we love ourselves a great ESG conversation. But I'm excited to kind of dive in because there's a lot of misconceptions about it. I think it gets a bad rap. I think it gets a bad rap in some areas, and it gets just the right rap in others. Both things are true.
The reason that was so important, Michael, is because the simple fact that cash is tough for oil companies right now. If they've got a lot of debt, if they've got a lot of issues, cash is tough. Now, if you ain't got a ESG program, you're toast.
I mean, even Continental Resources, our favorite Continental Resource, Harold Hamm, he wouldn't strike me as somebody who's hardcore into the ESG. Even they have an ESG page on their website. So that tells you all you need to know about ESG. But I think that's about all we need to do. Whip it around for random story time in the oil field. Please, if you have any stories that you'd like us to cover or territories that you think we're missing, email me, mtanner@entercominc.com. We appreciate it. Like I said, we'll be coming to you next Monday, back on our regular rant schedule, segment 1, where we're going to be talking about sort of the history of ESG. But I think it's time to move into the week that was in oil trading. But as always, this segment is sponsored by our friends and loyal sponsors at Sandstone Capital Group. These guys do insanely good research. They provide all of the levels, and most of the research from this podcast comes from their Energy Glimpse solution. Just check them out, www.sandstonecg.com. Great website, 949-561-1818, extension 101. If you need them, they will be there for you. In terms of the stories that happened last week, obviously, I think we did a good job of covering that in our random story time. So really, really the biggest thing that the one thing that happened this week that I think to sort of take away from stories was looking at those EIA numbers. And if you have not seen that article, you have not read that report that came out on Monday, I highly recommend doing it. I mean, because right now, the way oil and gas is trading, it's all fundamentals. Until we know any new data points that come out, it's all fundamentals. And these are what moving markets right now. It's great numbers. And it's really, look at the individual. I'm telling you, it's very, not weird. It just confirms everything people are talking about, how the natural gas. I mean, it's weird how when you look at the data, it confirms what the experts say. Oh, you're looking at the same data then, which is always convenient to know. But when you look at this, yes, Appalachian, Haynesville, they're not falling in production. It's great. It's not great to see. It just confirms everything we've said about natural gas. But Stu, what do we have on the international news desk?
Well, it's funny you should mention that. Rystad had put out a worldwide natural gas article this week that we had also put out some information on. Internationally, demand for natural gas is going down by 2%. However, worldwide supply, because of all the other stories that we are covering, natural gas, if you take a look at the Leviathan field, you take a look at everything else, supply is going down. Price will go
at a quicker
up.
rate, I assume, right? More than
Yes.
2%.
Yep. So price is going up on natural gas worldwide.
And it will. And I joke a lot that natural gas is killing me. And if you watch the digital ticker, down 2%, to 2.8% today. So I joke a lot that natural gas being we keep hearing natural gas. You have to think about the summer winter cycles. That's another reason why I don't like trading natural gas. It's too cyclical for me. It trades like what we call a piano chord, a very nice, well put together symphony. If you can just follow the trends and you follow the weather patterns and specifically the seasonal effects, you can actually do a pretty decent job on that. So like I said, you may hear me in our 2:00 show today making fun of natural gas being all the way down to $1.72, but I really do expect it to come up. And this is the reason why, and it's partly the reason why when you look at this EIA numbers, I think the M&A market for natural gas is going to be crazy. I think you're going to see the big boys get in on it heavily. Anything else from the international news desk?
It's just we've covered a lot of it, a lot of things. Oh yes, we also have Occidental TSA abandoned the information or in the plan to acquire the assets from Occidental in Guyana, and that is pretty big. Occidental really needed that.
Yeah, it was about a $5 billion, and it was about a $5 billion deal to set. Occidental was going to sell their Ghana assets to Total in part to help finance the Anadarko purchase, which is now basically worth zero. The Algeria,
37 billion to zero, Michael, something like that.
Oh yeah, no, 37 billion to zero. I mean, actually there was an interesting thread on EFT Twitter. I know I keep referencing this, but if you are not on Twitter and you're not following EFT, please do that. I'm about to be June 1st, by the way, is when all of the new socials are being relaunched under a new strategy. So June 1st, go look at the Oil and Gas 360 Twitter. I will be following the top accounts that you need to follow, probably about 200 of them. Those are the accounts you need to be following because they're going to give you probably the best insight of what's going on. But a very interesting thread that I said was that, to be honest with you, if you actually look at the market cap of Occidental, you can own if we look at the market cap of Oxy right now, let me do that right now so I don't mess this up. I'm pretty sure it's like 10, 12 billion. It's something crazy like that. More market capitalization, 13 billion. So it wasn't far off. So market capitalization, 13 billion. Majority of that capitalization comes from their Anadarko Corporation purchase, because Anadarko had the best acreage, and the best acreage that's in Occidental right now, and the only stuff that's actually profitable is the Anadarko. So the Anadarko deal probably is the only thing not keeping them afloat. What's funny is their best acreage was acquired in that deal, but it's also the deal that the debt from that is now completely hanging over their head, and those $800 million quarterly interest payments to senior debt holder Warren Buffett. That'd be a great quarter. Every quarter, he's got to be loving it.
Actually, it's kind of interesting from the standpoint that some of my charts are saying day trade.
Oh, yeah. Well, maybe day trade them. Don't long-term trade them. That's all I'll say. Don't
Long-term, you're out,
long-term.
man.
Oh,
Sorry.
yeah, no. Okay, so yeah, that's the other big thing to be watching for on the international side. It's thank goodness Total was able to get out of that. If you're a fan of Oxy, unfortunately, I'm sorry. But it's just tough for them. When we move in to the levels for crude oil this week, if you're on the bull side, which I was tentatively, you were right. So chalk it up for another win for the league. The levels did okay. Really, the big levels I had were 32.73, 33.65, and 34.36. If you're a bull, those I think are your three numbers you need to be watching for very specifically. Pivot point 31.49, which is the point of control for the entire week. So that was good to see. What's just interesting about where we are at now is 33 or really 34 to 36. 35 even, or really what I'm calling 34.91. 34.91 is the top. But if we get above 34.91, we have not seen between 35 and it's like 42. We haven't seen that in like 20 years. Or not 20 years, it was like 15 years. I went back and looked at the chart because I was trying to figure out where's the volume. All right, when this thing pops up above 35, which it's bound to do, what's it going to do? And I started mapping. It's like, oh, wait, you can't. You actually can't, because there's little volume in there, when that's, sort of the downside to playing the volume game. And what I do with order flow, at some point when there's no volume, you don't have an idea of where it's going. So I'm a little, obviously I don't think it's just going to bounce all the way back up to 40. It's not just going to go above 35 and immediately kick to 42. It might, who knows, depending on how the algos play it. But, it's probably going to hang out, $34, $35. It'll be interesting to see as we roll into next Tuesday when we have contract rollover, what happens? Do we see this oil price dip back down, maybe below 20, below 15? I don't know. I don't think it's going to go negative, but I think Tuesday is going to be a big key when everything rolls over. As we know, that's why we saw negative pricing last month. The same situation is quote unquote occurring on Tuesday. Now, I don't think it's going to occur. I don't think negative pricing is happening, but we might see something interesting. So I think early on I'm skeptical, but I do think $30 is a really good floor, assuming something crazy doesn't happen with storage.
You covered all the getting back on the road and all the demand starting to come back up. So I think that you nailed it on that. So
yeah.
I think you won't see the negative numbers because we finally did have, you called it. So
yeah. So but sometimes it's just better to be lucky than good, Stu. That's how I always say it. Sometimes it's better to be lucky than good. If you are a bear this week in terms of just a structural standpoint, 32.73, 32.01, 31.49, I think are your levels as you chop downward. There's just so much volume to the downside that, really it's really, I would probably, if you're looking at this from an order flow standpoint, I'd like to dive into a footprint chart versus just playing the volume levels. So if you are looking to get into trading, if you are a bear and you want to get into trading from an economic or from a future standpoint, please do yourself a favor and get in on a footprint chart and get yourself a price ladder. It's going to be the best ways to trade. Partly why, as Stu mentioned, we've been not as bullish and we weren't really thinking negative pricing was going to happen was, one, it was an anomaly that, it's never happened before. Why do we think a unexpected and an unprecedented event is necessarily going to happen again? It was possible. I think, in the interim, I think a lot of people said, hey, maybe it could. Early on, I thought it might be possible. But part of the reason why it's definitely not going to happen on Tuesday is when you look at the EIA numbers that dropped Wednesday. We covered this in the closing bell yesterday. 5 million, not 500,000, 5 million barrel draw total U.S. DOE crude stocks, and specifically at Cushing, there was even more, 5.6 million barrel draw all the way down to 56.9 million barrels. Great seeing stocks below 60 million barrels. And I just wanted to give you an idea, there's about 93 million barrels of storage available in Cushing. And part of the reason what happened last negative pricing time was it was all booked up. There was this expectation that production wasn't going to be able to get turned off fast enough, and all 93 million barrels of storage was accounted for or rented out. So the fact that we're seeing some draws from that is allowing these supply-demand balances to balance back up. Total domestic crude was down 100,000 barrels, 11.5 million. Like to see that number a little up, but as long as we continue to drop 100,000 barrels off the market per week, and we can get, I'd like to see us below 11 million. I think that's the target zone for when we get into June. I'd like to see us about 11 million barrels, but who knows? If oil price continues to come up, 33 is $33 is the new 70. So I wouldn't be surprised if this thing hit 40 and you saw frac crews starting fired up, which is good. I saw an article. There's only one frac crew driving around in North Dakota right now. If you're on that crew and you're listening, please email the show. I want to know what it's like. Are you guys like the lone wolves out there riding high? Only people, the select few allowed to frac right now. It's got to be a good frac crew though. They're going to probably get pretty good results. That's probably the top. Those are the top frackers. I promise you, who's ever out fracking right now, that's the top crew right there. That's the Super Bowl right there.
Yeah, they all have rings.
They do, exactly. They've been around a while. I love it. Anything else on the week from the week that wasn't oil trading, Stu, before we dive into our 360 fund?
No, it's just been crazy.
It has been crazy. Like I said, we will be back Monday with more of a regular structured lineup with a rant to begin with, and then we'll dive into the week that was. But we need to get in down to our 360 official, non-official fund. But before we do that, the lawyers make us say this so we don't get sued. As always, this segment is for entertainment purposes only. Everybody on the show, me, Michael Tanner, Stuart Turley, invest for our own account. We do not manage anyone's outside money. We do not give investment advice. We don't offer securities or have any involvement in the regulated side of the industry. Remember, risky is investing. Investing is risky, and you can and will lose all of your principal. Trust me, it's happened to me before. It will happen to you. Stu, how's your portfolio looking this week?
Doing mediocre. Duke is about my best thing going, and it's flat.
Okay.
But Rattler is been pretty strong for me right now, and
Good.
charts are really looking good on Rattler. It's a subsidiary of Fang, and I'm out of Fang, but Rattler Midstream is doing really good. Enphase is down like a big dog, but Geopark is down just a little bit, but on the week it's doing good.
Yeah, and you can check out all of our picks at the world's greatest website, www.oilandgas360.com. Just go to the 360 digital closing page. You can check out all of our picks. Tomcat sounds like he's out.
He's out.
Woohoo! That's nuts. Yeah. Markets finally get a win for the week.
Oh yeah, he's done well, and he's sitting on the sideline, and I think it's partially because of the holiday weekend. Yeah. But he and I were going through some of it, and he's got good reasons.
No, I can only imagine, and that's an interesting data point. The only thing I've done is double down on our natural gas position for us, and that's down currently 3.2%. So yay for the experts on that one. Our total basket price though for an entrance point, $1.73 though, so we're only down about 20 cents on an average bucket. So it's not terrible. Bonanza Creek does well, does not do well. Currently it's sitting at 16.19. So we've made about $6,500. So the fund's doing okay, about a % increase from my end. Like I said, the natural gas is down. Still looking to dive in for a longer term play here. I've got a couple things I've been working on. I honestly was going to go deep into Silverbow and really got lucky on not, because things have sort of flipped the charts on that one, but we did see them up huge twice in our biggest movers last week. So that was really good to see. Silverbow, friends of the show.
I forgot to let Chenier is still rolling.
Oh, I'm sure. Chenier, that is going to save our fund right there. We're going to stick with that till the cows come home. I love it.
Chenier's in the stable.
Liquid natural gas, I love it. Anything else before we let these people go here?
Nope, I'm good. Been a busy week.
It has been a busy week. We have some great stuff coming up. As always, Monday, we're not going to have a closing bell on Monday in terms of a 2 p.m. live show. We will be coming to you. We always are working over the weekends. We'll come to you Monday morning. You should see our week ahead podcast that will be dropping. So tomorrow and today will be our last 2 closing bells for the next 3 days. We'll give you a little weekend off. We'll spare you some content. As we mentioned, Alex Epstein, author of Moral Case of Fossil Fuels. You can check that interview out on the Energy 360 Network, iTunes, Spotify, Entercom, YouTube. You can find that Tuesday, Wednesday. What's Wednesday again? I forgot. We said at the beginning of the show. What's Wednesday? Netherlands Sewell. I love those guys. Great to see them on Wednesday. They're actually cutting that up tomorrow, so I will be getting that chopped up this weekend. On that, that's the big dogs on that one. You're bringing out Aaron for that one, president of Entercom, right?
Bringing out the big guns.
Battle of the Titans. That'll be definitely one to see, and we will get that. We should be seeing a commercial and an early write-up for that starting to circulate on all of the socials starting tomorrow. But with that, we're gonna go ahead and let you guys get back to work. And if you want, go ahead and start your weekend early. Make it a 4-day weekend. Might as well make it a 4.
They got to wait till our 2:00 live show.
You're right, but I'm giving them permission in the morning. If you just want to take a 4-day weekend from Memorial, feel free to go ahead. But slip back in for the live show, so then your boss looks like you were there at 8 to listen to the show. You were here at 2 to listen to the show, and you can check in with a couple emails. That's the beauty of the work from home life. You can work from the porch. But we are going to let you get back to work, finish up what you need to do, and it's our permission. You can go ahead and download. I'm still getting you the permission slips, so don't worry. We're going to have permission slips for you. We'll get those fired up. You can download them. Please check us out this afternoon for the 360 digital ticker, and please enjoy your 3-day weekend. We will be coming back to you Monday morning for our week ahead podcast. We'll see you then.